Because Mike Mayo is joining us right now. He's the analyst, of course, with Wells Fargo Securities. He did put out that note today. Earnings about 10 days away. It's good to talk to you. You're on the CNBC Newsline. So you tell Leslie, or you put out in your note, that the move is only 1/3 of the way done. So what accounts for the next 2/3 of it?
Well, thanks for having me on, Scott. Look, you have the first up earnings year in 2025 after 3 down years, and we think there's 3 more up years to go. We estimate 15% earnings growth last year and at least another 30% over the next 3 years, so you're only 1/3 done. And don't forget, you have generational deregulation. You've had 1 year of deregulation, and you have 2 more to go. So once again, only 1/3 done, and this is like the mid to late 1990s when the bank group re-rated. We think that re-rating is only halfway done. So I'd say we're in the 3rd or 4th inning of this bank stock rally. There's more to go.
Yeah, I mean, you made a great call on Citi, which is coming off of a great year, obviously. It's up 70+% over the last 12 months. It's your number 1 pick for the 2nd year in a row. That's curious to me after an incredible year that the stock has had. Why not look for something else at this point that can have maybe the same type of year that Citi did?
Well, I don't agree with your tense, Scott, when you said you made a great call, like in the past tense. I would say in the present and the future tense, there's still a lot more to go with Citigroup. And I think the most important point is I think 2026 is the year when Citigroup gets out of regulatory purgatory. I think Citigroup gets out of the regulatory penalty box. I think their consent order gets lifted. And the reason I say that has zero to do with anything that Citi has ever said. Citi's just doing the best they can do, and they're going to move forward. But what Citi has remaining is only, in my view, regulatory box checking. Meanwhile, the regulators have said they are focused on safety and soundness, substance versus form. So if Citi has completed the substance and regulators are focused on the substance, then I think 2026 is Citi's year. And once that consent order gets lifted, I think it is night and day different. Instead of Citi's board spending over half its time on regulatory matters, they can spend time on running the bank. The other thing, and we released a big new in-depth report today, and we said, they only have 8% returns, which is worst in class. This is not best in class. This is a worst in class bank that's getting back in the game. It's like Citi has been on the injured reserve all decade, and now they're getting back in the game. But if you take that 8% return and you adjust for the abnormal expenses and abnormal costs and abnormal capital, the current returns would be 14%. So it's not a matter of if, it's a matter of when I think Citi gets to these much higher returns. And if you get to these much higher returns, then I think they get valued still a little bit below the average bank. And Scott, the number you get in a few years is $200 stock.